Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everybody. Welcome back to another live stream. My goodness, gold is not stopping here. We are down 2.4%, fresh lows. My goodness, man. It is just a... Metals have been crazy here recently. We're seeing a lot of downside all at once here. And, you know, this has been obviously a phenomenal trade for me. But a big thing here is there's like a lesson in the sense that I've had for weeks so many people telling me that gold is going to bottom, gold is going to rip higher, that, you know, shorts are going to get killed, all this sort of stuff. So I want to respond to that because I'm not here to be like, haha, I told you so, because I didn't know with certainty that gold was going to do this. But for people who have been saying that, who have been so confidently posting that shorts are going to get killed, gold is going to the upside, you know, it's bottoming, it's already bottomed, you know, close now because you're going to, like, I've received so many of those types of messages. And it's always a reminder to me that when I see those floods of messages of people who are probably long themselves or frustrated with gold themselves, they are dropping those comments and they're you know, in a state of frustration with their own trading. That's usually where that's coming from. And I recognize that, but it also tells me the psychology of people when it comes to trading. Most people do not want to admit that they're wrong. They don't want to admit that they could be wrong. They want to be right. They want to take profits quickly. They want to, like, this is why trading is so interestingly a commonplace experience. Like, we all kind of experience the same things when trading, because I know what it's like to be like, you know, I think it's going to bottom. It's got to bottom soon. And then it goes lower and your heart sinks, right? And it goes lower and your heart sinks again. And it's very frustrating. It's very, very challenging. I am not here to like boast and be like, ha ha, see, we went lower, right? Because that would also insinuate that I know with certainty what gold's going to do. And I don't. I'm trend following. The trend is down, right? So having the humility to say, trend is down, I don't know where the bottom is like massive maturity in trading that people clearly in my comment section, again, don't usually have. Most people are so confident that gold's going to bottom at, you know, 4,200, gold's going to bottom at 4,150. And when it doesn't, their account gets like toast, right? It gets just absolutely slammed. And you have to rewire that thinking, because if you don't, you inevitably are going to be wrong at some point on something. And if you have that mentality, that mindset of thinking you know something in trading for sure, it's only a matter of time before you liquidate your account. Okay. So again, do I know that gold's going lower from here? No, I don't. Right. I now have a very clear opportunity to continue to trail my stop. In fact, I'm going to do that here as we're speaking live, because we just broke right on through. Of course, the candle hasn't closed, but I'm not too worried about that. We're showing strength here to the downside. I'm going to go ahead and trail further on this trade. I need to share this with members as well, so give me just a second as I do this. It's going to take me just a moment, but I have forgotten to update members in the past on this, and I really don't want to do that today. So gold is absolutely flooding lower. And again, I don't know where gold is going to go next. it seems like a lot of people in the comment section who have been saying gold's going to rally, gold's going to rally, they seem to know where gold's going to go next, except they don't. The point is, it's a trick question. No one knows with certainty where gold is going to go next, except for people who don't make money trading. They seem to somehow know where gold is going to go next. Okay, so I'm trailing stops on my gold position. 41.58 is where we're going to put that. Give me just a second here. What I'm going to do is I'm going to update this to members. Let's see. Trade update. Okay. Let's see. What I'm going to do here is I'm going to take a screenshot. I'm going to share the update with members here. Bear with me as I do this. Let's see where we're at. Let me just clean this up. Okay. Price breaking through the lows, trailing stops further into profit. This is unbelievable. It's the biggest short position profit I've ever had on anything ever, actually, but gold nonetheless. But people ask me, like, somebody asked me yesterday, they said, Nick, at what P&L point are you going to close out the trade? And I was like, absolutely not going to make any decisions based on P&L, right? You never should, because P&L doesn't mean anything. It's just the result of how the trade is going. But telling me when it's time to get out of the trade is going to be price, right? So when price fails to, I liked the way someone said it in my comment section recently. They said, Nick Holt, like he was explaining on my behalf to another commenter how I handle my trades. And this person said, Nick holds till failure with his trailing stop loss. And I was like, I've never thought about that, but you know, I'm a amateur gem goer. And I was like, that's exactly right. Like I hold till failure, just like how you like try and lift till failure to grow muscle, right? Hold till failure in my trailing stop approach. Going to continue looking for lower highs in order to trail further on the 4-hour chart. Okay, we are good to go. Look at that, man. That is, you love to see it. And granted, you know, before this, I had a gold short that I lost. So here's a little bit of context. I had a $5,200 losing short position on gold prior to this trade. So, you know, this move has been really, really smooth. But the one before it, I got stopped out. Like I got punched in the face by it. So, you know, it's also important context-wise to know that, like, if you're going to catch this type of move where you're trailing stops and it just keeps going and going and going, that's rare. It's not every day that I have those trades. In fact, over the last few years, I could probably count them on two hands how many times I've had trades that look like this. It's not that often, right? So trades where they just go and then you trail a stop and they go again and then you trail a stop and they go again. I mean, we are talking about very rare instances where you have such a nice, clean trend continuation. Now, gold has been a smooth short position here this year. Like, you know, it's definitely been sluggy. That was you, right? The till failure concept. I loved that phrasing. That's perfect. I think I might steal that and use it. Hold till failure, right? Like exactly. So failure at this point for my gold trade is if we fail to hold 41.20 or so, that's where I'll take profits. So at this point, I've secured more profit on the position. I need to trail it on my my actual trading account. Bear with me here as I do that. So I'm going to trail my stop loss here. So where are we at? We are currently about 8% in profit. Stop loss is locked in about 4.6. So I'm just going to figure out where 4.6% of profit is. That's going to be 4.6% profit. 371.26. Okay. Okay. Sorry, guys. I'm trying to simultaneously present while also trailing my stop loss in my positions. Let's analyze gold and silver, please. That's what we're doing, man. Look at the screen. That's exactly what we're doing. What are you talking about? I don't know why that made me laugh so much. Hey, Nick, do you think gold is going to have a bounce or just keep going? So I never know, right? We had a conversation in the group yesterday inside of our Discord about trying to take the counter trade. If anyone here remembers that, if you're a member, we were talking about this yesterday, right? In the Discord, we were talking about, like, do you ever get tempted to take the, like, let's say I'm short, right? I'm bearish biased, but I think, like, hey, we could get a bounce. Do I play that bounce? And the answer is never for me. Now, some people do that great. Some people love to play the pullback. They love to try and catch the bounce. But if I have a bearish bias on something, which I have continuously had, let me refresh Edge Finder. I've had a bearish bias on gold and silver for a minute now. I never trade the counter to it. Like, I don't try and catch, I don't try and get cute with it. I don't try and get fancy and be like, oh yeah, no, I'm going to catch this little, I think we might bounce up here, and then I'll go short again. Like, I don't do that. So I tell you that because I have in the past, and I found that to be, like, incredibly difficult. And more likely than not, I tend to not do very well with those types of trades. If I have a macro bias and a price action trend bias to the downside, for example, in this case, gold, right? My bias is to the downside. I don't really believe that I have edge trying to counter trade that, right? I don't have a lot of success trying to get cute, catch the bounce, etc. Now, I know you might be asking that question. I have asked that very same question in the past from a place of frustration with no pullbacks. Or, for example, I'm not in the short position. I wish I was, and I'm going to try and catch the bounce in the meantime to kind of entertain myself until I can get short. I don't know what your thinking is. I'm not accusing you of thinking that way, but that's how I have thought about that in the past. Like, full transparency, frustrating to be like, I am not in a move. I'm getting annoyed that it keeps going. I'm going to fade it, because then I'll fade it, make some profits, then I'll get back in the right direction. But more often than not, that has cost me, not helped me. Like, trying to fade it, fade, catch a bounce, etc., has been more detrimental and caused me more losses than just sitting on my hands and waiting, keeping my mouth shut, keeping my hands sat on and waiting for the retracement. We don't know where it's going to be. I don't know where it's going to be. I'm telling you, the reason I trail stops is because I don't claim to know what price is going to do with certainty, right? Trailing stops, the beauty of it is I acknowledge this thing could flood lower, 6% lower today. It could. I don't know. I hope it does. It'd be great. But instead of predicting that, or trying to predict that I think it's going to bounce for a little bit and I think we're going to catch like a 1 hour. No. I'm not going to try and play that game. That's not my edge. That's not where I make money. I make money picking the macro direction with the help of tools that I've built to do exactly that. Right? I'm not perfect. I'm not always right. This is not a holy grail or a magic system. But I've done really well over the years sticking to one system over and over and over, right? Looking for pullbacks in combination on the technicals and macro trend. So that's my answer. I know it's a long answer. Hey, thank you very much, Cameron Vaughn, for the $5 donation to the stream. I don't have my coffee mug in front of me, but you know what I'm going to say for the regulars. All donations to the stream go straight to the coffee fund, which helps to make this content, right? I operate off, and so does the editor. We operate off coffee. So thanks for keeping us energized. Question: based on the amount of Bitcoin that is not in profit, being an indicator for the bottoms of every bear market, are you buying? That's a really interesting question. Like, you're pointing out that a lot of people who are in Bitcoin are now underwater, right? That's a fair point. And so I'll answer shortly. Like, the answer for me is no. I'm not a crypto hodler. I'm not a, crypto is the future type of person. I'm not saying that it can't be the future, but I don't like crypto as much as I like stocks. Like if I have 100K to invest, personally, I am looking at good companies because they create yield. They are earning profitable entities. That's what I want to invest in. That I understand. Crypto, I don't really understand. To me, it's become more and more regulated. It's practically just another way for the IRS to track people at some point, I feel like. It's getting closer to that, right? There's no, so that appeal, which was a huge one for crypto, seems to be withering away. But I don't know. I mean, I think people are using it more and more. A lot of international countries use Bitcoin big time. So I'm not talking bad about Bitcoin. I could see it being a continued useful asset class. But I don't, if I have 100K to invest, for me, it would probably be in a collection of companies that I like more so than Bitcoin. That's my take on it. Now, that being said, do I trade Bitcoin? Yes, I love trading Bitcoin. So if I have a macro outlook that is very positive, for example, I love trend following Bitcoin to the upside. But right now, crypto's in such a funk. It's in such a broken chart mode that I have no idea where this thing bottoms. I would not be surprised if Bitcoin moves lower. Again, if you are a long-term person, I would say this. If you're a long-term person on Bitcoin, I don't know if it's going to go back to the all-time highs, but historically speaking, has done a pretty good job after very large corrections like this, right? You may see 75% down. So don't be surprised if we go down to 30,000, right? If we're just using history as a guide, Bitcoin many times has seen 75, 80% drawdowns. Like that's almost stock standard, 70+% drawdowns in Bitcoin. Now, if we enter into a recession, I think that's going to be closer to 95% down because Bitcoin has never seen a recession before. That's my biggest worry with Bitcoin is that if you see, and we have throughout its entirety, we've been in a pretty much Fed printing tons of money, and we have not seen a prolonged recession. We've seen short ones or little minor ones, but we've never seen a 2008 or a 2000. You get that type of environment, I think Bitcoin sees some real pain. But that's my take on it. I could be dead wrong on that. If you are a believer of Bitcoin, history would suggest, doesn't guarantee anything, past performance, not future, indicative of future results, etc., all the risk disclaimers. But history, 85% discounts, 80% discounts, 75% discounts, those have been really strong by the dip opportunities, historically speaking. I hope that helps. That's it's kind of your personal outlook. Do you believe in crypto? You have to ask yourself that. For me, I don't necessarily not believe or believe. I guess I'm an atheist when it comes to Bitcoin. I don't claim to believe in it. I don't claim to not believe in it either. I guess actually an atheist on the God subject claims to think there is no God, but also there's like agnostics, all that. Anyways, that's for another YouTube channel that I don't have. But for the Bitcoin world, yeah, it for me is, I don't claim to really have a strong directional long-term bias on it. I think that if you're a believer in it, these sorts of moves you start looking at with opportunity where most people are fearful, but understand that a true recession could be valid fear. Like you could see 95% down. Anyways, gold is not chilling here, guys. We're down to 4,000. 4,000 an ounce coming in hot here this morning, guys. It's unbelievable to me. We were just at 5,600. If you went out and bought a gold ounce, you lost $1,600. But did you really? The gold bugs, what their true answer would say? They would say, well, I still have a gold ounce. And that is another example of just how we talked about Bitcoin. If you're a gold believer, if you are a long-term gold bull, understand something. Today's move should be looked at positively, not negatively. If you're a long-term buy and hold investor of gold, not not a short-term trader. If you're a short-term trader and you're long, this is painful. I get that. Like if you're using a stop loss, tight stop, long, you know, we completely failed at support level so far. That's not fun. But if you are like somebody who loves precious metals long term, this is me personally. I like gold more than Bitcoin. If I'm looking at gold, I'm looking at this and I'm saying, wonderful. I put out a tweet yesterday. I said, I'm in a weird place. Short term, I'm still bearish gold. Long term, I'm getting bullish on gold. It's a weird dynamic. Does that mean I'm going to close shorts out right here? Nope, because right now trend is still down. Macro direction is still down. Edgefinder has been solidly bearish on gold for a couple weeks now. It's been one of the better calls of the year, has been gold bearish setups. I continue to sit in my shorts. I don't know where the bottom is. I'm not going to try and call the bottom. I'm going to trail stops until the bottom shows me that it's here. How am I going to do that? Well, again, if we start breaking resistance, that tells me that gold may be showing signs of bottoming. And even then, I don't know if gold is bottoming. If you're not allowed to critique, then it's not real. Oh, you're talking about religious stuff. Yeah, wrong channel, my man. Although I am fascinated with religion, I am not. It's not. I'm also fascinated with markets on this channel only. Nick, your gold trade has been the highlight of my journey this year. What a beautiful trade. Are you? I guess you're also watching gold, maybe from a short side. Again, it's a weird spot. I posted that tweet yesterday because I am long-term bullish gold. Like, as weird as that sounds. Short term, though, I still think it moves lower. I've said that for a couple weeks. I'm still in it. I don't know how far it goes, and I don't know if maybe it is at the bottom. I don't know. The difference I think that is so critical is acknowledging that you don't know, right? What gets people in so much trouble is saying something like, I know this is the bottom. I know it's going to go higher from here. Or giving into chasing and saying, I know this thing's going to keep crashing. I'm going to short here. Why does that get you in trouble? Think about the mindset you are in when you say or think that. You think to yourself, I know it's going to do this, so I got to size up big time and cash in, profit on this, right? That's so dangerous. That is so dangerous. So be careful with it. I don't know where gold is going. I'm trailing stops. I'm just agnostic to what price wants to do, trend following in the direction of where we go here. Congrats on the huge gold trade. Next stop 37.50. Let's just do a little higher time frame look real quick just to see where we are. So we're testing. This is crazy, man. We're retesting October. I mean, after all that run up, we've given all of that back. Gold is negative on the year sharply at this point. You're talking about down 10% on the year. Unbelievable. We went from up 20% on the year plus. Wait, hold on. Let me just see. This is rough. 25+% on gold to now down 10% or so, 8 to 10%. Unbelievable. That is macro in action, because again, everything changed on the macro. Inflation started rising. Economic growth metrics have been coming in better than expected recently. Jobs data has been upbeat. All of these things, if you monitor them, you suddenly get the macro picture down. And you're like, okay, yeah, gold's got some challenges in front of it. And it's beautiful when you catch the macro story early and then you watch price action start to catch up. Like, price action is beautifully following suit with macro right now. That's why fundamentals are king for direction. Absolutely. If you are trying to, we say it on the channel over and over. Fundamental analysis, at least the way I use them, is for direction. Technical analysis is red light, green light. Okay. So fundamental analysis, understanding what we just discussed, the macro looks bearish for gold, right? That is my directional bias. So am I going to take any long positions in that environment? No, right? I'm not going to take bullish positions on something that macro-wise, directional flow, I think is bearish, right? Fundamentals are getting a -7 on Edgefinder. That is so powerful to see such synergy across our metrics. The dollar looks very strong here. I bet you the dollar's ripping today, isn't it? I haven't even looked past gold this morning because I've been so busy. Look at gold. The dollar, man. I am also long dollar. Let me see what my P&L is looking like on this one. Yep. So we are up 12 on dollar and 30 on gold. Again, if 5 years ago, 7 years ago, 8 years ago, when I was newer to trading, I would have looked at these things and said, and rushed to take profits. I would have done that days ago, right? Beginner Trader Nick was king at never letting a winner run, right? I had to completely reverse that trading psychology. I don't know about you guys, and maybe you're in this circumstance right now. In fact, if you are this person, I'll just share my personal experience with this. When I got started trading, I wanted to take profits as quick as I saw them come into my account. Like if I saw a little bit of profit come in, I got scared that I'd give it back. So I would close positions very quickly. Nick, I'm at that stage right now. Okay, so if you're at this stage, I think it's super common. You're super, super valid and normal if you feel this way. Can you give me a 1 in the chat if you are this type of person? Because I'm telling you, it's a muscle you've got to grow. Okay. Holding winners is hard AF. Okay. When I first got started trading, give me a 1 in the chat if you relate to this. When I first got started trading, all I wanted to do was protect profits and be able to close green on the day. That felt like the right thing to do. It felt like I need to close my P&L. I need to lock in gains. I do not want to give back my gains because that makes me a loser, right? That is the mindset. I got to win all the time. That's what I thought was the right thing to do. And then you scroll through social media, see all these guys always in profit, always talking about, I closed $4,000 today, I closed $1,000. And so there's this temptation of being like, I need to close winners. And to each their own, right? If you're a pure technicals trader and you're just trading little like back and forth moves on like the 1 hour or something like that, that might be fine. I'm not saying that's wrong to have a high win rate, but for me, it kept me back from making gains. So the primary thing I trade, do you let winners run with currencies? To an extent, I trade currencies a little bit different. But I'm primarily a commodities and index trader. So what held me back with that is, first of all, I primarily did not start out trading macro fundamentals. That changed everything too, because that gives me so much more confidence to hold on to winners. If I know that the macro looks a certain way, if Edgefinder is giving me a confirmation, I don't want to close trades. I want to hold on because I think the macro story could continue to play out, right? That's how I look at this. But anyways, closing out profits, there's an expression in trading. You don't go broke taking a profit. And I violently push back on that with my own personal style of trading. I think you absolutely can go broke taking profits quickly. Not to be like, you can't. You certainly can, and there are styles that do that. But for me and my style, that would make me probably unprofitable. Actually, almost certainly unprofitable. My edge, my biggest profit ability in trading comes from Edgefinder confirmation, let winners run, follow technical price action, and macro directional bias. That is it. That is all I'm here to do over and over and over. It would be silly of me to take profits off when I still think the macro direction is in my favor. Does that make sense? I'm not here to take a little profit just because the price jumped in my favor. To build that muscle that I'm talking about, the hold on to winners muscle, you have to trust your back testing. You have to trust the work you've put in. You have to trust your macro fundamentals understanding to be like, I'm in the right direction. I need to stay there until it proves to me that I shouldn't be in there. I'm a fan of saying, I want to stay in this trade. The chart's got to kick me out of the trade. I'm not going to kick myself out of the trade. Are you kidding me? If something is good, why would I step away from it? If the setup is clean, why would I walk away from gold shorts? If I had closed out, think about this. People say, you can't go broke taking a profit. Do you know how much money I would have lost in unrealized gains here had I closed out of my gold shorts early? If I closed here, I had people telling me, Nick, you should close your shorts. You should close your shorts. Fortunately, I don't listen to comment section for my trading. I've done this for 10 years. I'm not perfect. I'm not the best trader. I make mistakes. I lose money all the time on small losses, etc. But I'm telling you, had I closed out early, I might have given up $20,000 in gains. You see what I'm saying? So anyways, I share every trade that I'm taking, full context, full breakdowns. If you want to trade in a similar way to myself, if you want to learn from the way I trade, if you want to see every trade alert that I share inside of our Discord, come join us. I'm telling you right now, it is worth every penny. We sell a service. It is a very, very high quality signal service. And what I mean by that is it's not a copy paste, make money. It's easy, holy grail, none of that. Trading is hard. It's one of the hardest things you'll ever do. But if you want to trade alongside myself and my team, if you want to get signals sent to you with full context, breakdowns, explanations behind why the trade was taken, if you want somebody that you can look over their shoulder and understand macro fundamentals, technical analysis, risk management, all these good things, join the service. It is currently 40% off, and we'll drop a link here in the live stream chat to where you can currently get access to it for 45% off. We also offer payment plans. It's a one-time payment to join the Discord, and it is worth every penny if you take it seriously. I'm telling you, if you are stuck like in the unprofitable position, before you quit trading, give us a shot, man. I'm telling you, it is worth it. We have had so many people. We had 2 people this week who dropped a comment. One person got max funded with FTMO this week, dropped it in our Discord. And I was like, that is the coolest thing. I love getting those messages. Trading is hard. We can't guarantee you anything. Trading is really, really difficult. But if you are ready to take that leap and go hard with it, come join us in the Discord, man. It is worth it. Link is in the live stream chat right there. Check it out. Up next, guys, we have the long-awaited return of Alan Perez. He's not been feeling well, so go easy on him today. I think he's back in the driver's seat today, which is awesome, and we will welcome him back just after this quick break. Don't go anywhere. Trading setups continue with Alan Perez. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone's doing fantastic. Love to see that in the chat there. You just joined after chatting with Drew. Awesome, man. I'm so glad you are taking advantage of the fantastic group that we have curated here at A1 Trading. Like Nick said, I was a little bit sick there, so give me some grace here, but I'm back in the saddle. Man, I might need your help with this because what has been going on, guys? What has been going on? Look at DXY here, right? Breaking out of 100.5, skyrocketing higher. However, look at the yields. Look at US 10-year yield, right? Guys, if you guys could help me out here, and good morning to everyone. Good morning, good evening. Cheryl's here. All of the regulars here. Hope you guys are doing fantastic. Thank you, man. I miss you guys too. Trust me, I was waiting for this sickness to be over. It's not completely over, but I was like, when you have lots of chores that you need to do, you just put them off, right? You kind of take it for granted. I got sick like bad, and I was like, Lord, if you cure me today, I will do all the chores in the house and some. So that was pretty much me. So I'm very happy to be doing better here. But let's go ahead and talk about what's going on. So we have DXY here shooting higher. Everything against the dollars, getting crushed here today. But you do have yields lower. So I'm curious to see what's going on. I don't know if you guys can help me out in the chat. Let me look at Fed Watch, see if anything has changed on that front. Um, give me 1 second here. Let's see. CME Fed Watch. Come on, guys. Okay, probabilities. Let's see if anything has changed. Oh, goodness. This is different. So September, 50% chance of a rate hike in September. Going even further, another rate hike after that. Q1 of 2027. Very different. Okay. That's obviously why we're seeing dollar very, very strong today. But yields today are dropping. I wonder what's going on. I wonder if there's some kind of a Middle East resolution thing or anything like that. But nonetheless, let's stick to what's going on right now. What we do know, right? We do know that the Fed has shifted hawkish, right? That is very bullish for the dollar. We also do know that we have a lot of the macro fundamentals pointing in the direction of dollar bullishness, right? The edge finder is pointing us in that direction. It's been doing that for a very long time. It's been doing a very great job at doing so. So dollar long seem to be the positive, no-brainer trade so far. Excuse me, guys. I might be sipping some water more than regularly here. But dollar to the long side seems to be the obvious trade here. I am very much still open to pursuing with that, right? Maybe we don't get a pullback all the way up to 1.14 or 1.15 over here, but I am looking at a pullback of some kind. You have now broken on euro dollar specifically here, broken a very important level of support. So we do have a lot of open space to the downside. Very, very much looking to capture maybe like 1.12, 1.1, right? So maybe we can even go all the way to parity too. That's something that's not out of question. So something I'm looking to participate with. Dollar CAD as well, just shooting higher. Like this sucks right here. Like this is so annoying for me. Like dollar CAD, I've been wanting to participate all the way since that 200-day moving average break. And now we are all the way up here. So dang, man. So dollar CAD, euro dollar short is something I'm looking to do. Kiwi dollar looks interesting as well, though we do have a major level here coming up all the way over here. We still got some ways to go, but I don't want to chase price ultimately. Yeah, I feel you now. Close at 140. Yeah, man. Yeah, you close at 140, and now we're like probably 300 pips above that. Let's see. Yeah, 250. That's crazy. So there's straight up, it's dollar bullishness season. That's what it is. You just need to wait for a pullback to happen. Unless you get dollar all the way to like 103 or whatever, and you get a full price in of all of the rate hikes, then at that point you will need to wait for something new, something fresh that the markets don't have to justify more dollar bullishness. But if you don't have that, then you have to kind of be patient. Right now, I have to be patient. I got out of my euro dollar short position, which did great. I'm very happy with it. But if I want to re-enter, I gotta wait for a pullback. And if I don't get a pullback, I don't get in the trade. So Nick, I was hearing Nick's segment. If you're in a trade and it's winning, right, and it's in your system to hold and let the winner run, let the winner run. If you are not in the trade like myself, this is something also that's just as important that you have to practice. Do not force the trade. Okay. If you're not in it, you're not in it. And so be it. Right. That's it. That's all you can do. You can just wait and just not be in a trade. Not taking a trade is also taking a trade too, right? So not having any risk on the line is a position to be in, right? You don't want to chase price DXY right here shy of 102. You enter because you feel FOMO and then you get absolutely crushed. You don't want that to happen. So I would say that that's going to be my position. Does it suck to see that DXY push way above here further? Absolutely, it does. But it doesn't suck as much as, chasing price here. And then I am just watching my phone, watching my computer every second at the PNL because I am fearful of what's going to happen next, right? That is not the position that you want to be in. So if you're in the trade, fantastic. Kudos to you. If you're not in the trade, it's fine. Wait for another one. There is always a big trade opportunity, at least once or twice a year. There's always one, right? You have a couple in 2024. You have same thing with Eurodollar in 2024. You have French Parliament snap election, right? That was really, really big. You also have July 5th or the August 5th sell-off, right? 2025, you have the initial wave of tariffs, all that good stuff, right? This year, you have, the war in the Middle East, and then you have now this. Every year, there's one or two things that you can wait on for. So to think that this is the last big trade opportunity, you're out of your mind. Okay, just be patient on it. Let's look at gold getting crushed today. Wow, look at that. So one thing that we had to overcome was that 200-day moving average here. We failed to do so, and now we are just moving straight down lower. As far as the next target goes, I have no idea. I'm thinking maybe 3,500, to be honest with you. 3,500 makes a lot of sense. But this thing, from a technical level, this thing's done with. This is over. The bulls, you guys lost. We lost. I was actually long gold for like a second. Thank goodness that I cashed out before the Fed meeting. But man, the bulls and gold, there's probably going to be a lot of buy the dip. No can at this point, no can do. Over here, it was justified, right? Because you were still within the level of support. You had the opportunity to overcome that 200-day moving average. From a technical basis, you had a chance. You no longer have a no chance. There is no chance for gold right now. Paul Tudor Jones says, nothing good ever happens below that 200-day moving average. With gold, you are right below that 200-day moving average. And then from a technical level, there's nothing to reference. Like there's no solid support until 3,500. So this is a free fall right here. Now, a lot of you guys are probably asking, okay, so should I just sell gold? No, you wait for a pullback still, right? Don't have FOMO. You don't want to just sell gold because gold could do, you could sell right here full port or whatever because you think it's all the way down here, and then it can just snap back higher, and then you could have shorted here. So just be patient. So for me, my level that I'm looking at to go ahead and short, if I do get it, would be right here. So this level that's green of support would turn right into resistance. And so that would be a pullback into here would justify a level to short gold. I can also look at Fibonacci retracement levels. So if I go to the 4-hour and I just put a fib like so, and then I do this, this could also be a level. So a pullback into here could be wise to short gold. Again, I'm not going to chase it or anything, but I'm going to be looking out for it. So that is my thought process. Marco, thank goodness you're here, man. How are you?
Hello. I'm pretty well. How are you? Hope you're feeling a bit better.
Doing better, man. For sure.
Great.
It was a lot worse. I couldn't say a single word. Like a full word. I couldn't say a single full word.
Yeah, just that's some crazy virus.
Yeah, I still don't know what it is. I tested negative for everything.
Well, as long as you're feeling better, that's the main thing. And let me know if you want to jump off. I can take care of the stream, or if you want, we can do like a brief joint segment. So it's up to you.
Yeah, I'll let you know when I tap out. But I'm thank
Sure.
goodness you're here. Man, what a lot has happened. So DXY is ripping. Metals
Yep.
are significantly lower. One thing that catches my eye: yields are way lower today. What's going on?
So for yields, I think what's going on is that we had the Fed event, which was hawkish. So the dot plot was hawkish. It was ill due to missing trades. So the Fed event was hawkish, the dot plot was hawkish, and then you had Kevin Warsh coming in with a very hawkish stance. So very similar to what Powell did. When Powell came in, he basically immediately went into a hawkish stance, saying we're going to be tough on inflation. So I think Kevin needed to do it just sort of to reaffirm the Fed and reaffirm the confidence in the Fed that they will bring inflation back to the target. But that happened before the resolution in the Middle East. And we know that the oil price is now pretty much back to the initial level. So it's like 3 or 4% away from that initial level. Yeah, it's falling even more. So we're pretty much back to the initial level. The Middle East seems to be behind us. So the MOU seems to be recognized by the markets as the real deal, which it's not. But the market thinks what it thinks. So we have to follow what the market thinks. And because of that, the inflation pressure should be lower. So inflation should actually drop in the United States. And 2 rate hikes, which are currently priced in, or I think one rate hike is priced in, but a second one is very likely according to the markets. I think that is highly mispriced. So I think in the next couple of days or weeks, the market will start recognizing that, hey, the Middle East is over. Oil price is back down to the initial levels. This oil crisis is now behind us. Do we need to hike? No. Do we need to keep the rate neutral? Maybe not. Maybe we can actually cut. So I'm trying to pivot to go short on the US dollar. I think the US dollar has been massively overbought. It could go up into this end of this week because you have corporate USD buying, which is a big bullish bullish seasonality pattern. But I'm definitely looking to fade it tomorrow or on Friday. You can even do it through bonds. So you can buy TLT. You can buy the 2-year bond. You can pretty much, what that means is you go short on the bond yield, but you buy the actual bond because the price and the yield have an inverse correlation. As the yield goes down, the price goes up. So that's my game plan, and I think that's the reason why the TLT and the 2-year yield is actually going lower today, because the markets are starting to realize that, hey, we don't need to hike anymore. Like the crisis is averted. It's done.
Okay, so what I'm hearing is, Marco, because I saw this on CME Fed Watch too, but the odds definitely shifted. But what happens when it all gets priced in, like what you're saying, right?
Yep.
Like the all those rate hikes are priced in, and then things start to fundamentally change. So I like that idea. So from a technical perspective, 102 is a level that I see here. Also 103.25, 1.3, or 103.3, you could say, is another level of resistance. So are these the same kind of levels that you're looking, Marco, for a potential short on DXY?
I would say I'm not looking for an exact level. I would say I'm looking for the extreme to happen at the end of this week, because so the corporate dollar buying, what does that mean for anyone that's watching? That basically means that the companies like Apple, Netflix, Amazon, Microsoft, they're doing business all over the world. So they're collecting foreign currency. At the end of each month, most of these companies, they exchange foreign currency back to the dollar. So that means the dollar catches a bid going into the month's end. So the peak the peak dollar bullishness could be that corporate buying, which happens today, Thursday, and Friday, and it could be the PCE print, which we're getting tomorrow. So the PCE print will probably print hot, but the key with that is it's backward-looking data. So that hot inflation will mean there was rising inflation before the opening of the Strait of Hormuz, before oil went back down to the initial levels. So the initial interpretation could be bullish USD, and selling into that could be a good play. So that is something that I'm considering to do. And just a short setup on the US dollar, I think it makes sense, especially now that the oil price is back to the initial level. I think that's the biggest confirmation that I can have.
Down 4%, Marco. It is dang near close to it. So
yep,
war started right here. This gap is that war. And we're right here.
Yep.
I was also looking for a potential buy opportunity on oil as well. I don't know what exactly that would look like from a technical basis, just because oil is like, usually it kind of drifts like this. It's not like currencies where you have like, you can trade zone to zone. But yeah, it's something that I want to, also look at. But I think too, there's a possibility that, you get even, below those pre-war levels, kind of like on the direction, because, oil was in this downtrend, down direction. So
yep,
I think the better trade would have been to obviously short it from here. But, in hindsight, it is what it is. But yeah, the metals I like too, to the downside as well. Again, the risk of it snapping back once you price in those 2 rate hikes or 3 rate hikes, and then things start to fundamentally change, that's a risk as well. So that's why I like kind of like positioning. Like I missed the trade, obviously, with dollar index, dollar long. I cut it off already. So all this extra move, I missed out on it. Gold, I'm not in the short, so I kind of have to just sit out and wait. But yeah, that's kind of my thought process. So when you're talking about shorting dollar, you mentioned doing it via bonds. Is there a currency pair that you're looking to utilize as well, or no?
Absolutely. So my research tells me that I pretty much can't trade bonds on most of my accounts. So I can do it on IC markets, I can do it on interactive brokers, but Darwin X0 is a no-go. I can do TLT, but that's something that I wanted to ask you. So I don't think the correlation with the TLT 20-year treasury is very much connected with the 2-year yield. I know there's a definite correlation, but I don't think trading TLT outright, which is the 20-year, would essentially translate to trading the 2-year yield. So I know there's products out there for the 2-year yield. Unfortunately, most brokers, most prop firms, they don't offer such products. So my options when trading bonds are very, very limited. Only thing I can do is I can buy TLT, but the correlation may not be there. What does have a correlation is the DXY. So essentially, the DXY and the 2-year yield, they tend to have a pretty close correlation. So I would say the bond yield idea is great if you can do it, which I can on IC markets and interactive brokers, but I would rather do it through the dollar. So through the DXY, which means buying Eurodollar or buying GU or buying NZD/USD or even selling USD CAD. So those are the 4 trades that were best trades to sell 2 weeks ago, and now they seem like the best trades to buy, as the narrative has flipped. The Strait of Hormuz is open. Oil prices are back down to the initial levels. We need to readjust, and I think we have an advantage because most of the markets are still asleep, and the markets are still pricing in hikes, which are no longer needed.
Got you. I like the idea of Eurodollar just because it has a high correlation to the DXY basket. It's essentially an inverse chart of that. So that's what I like. Give me a second. My phone's ringing real quick. I don't know where it's at.
I can take over until you take over the call. So let me just bring up my chart here. Whoop. So let's remove this, put this on the stage.
But yeah, I like the idea of Eurodollar. So that one to the long side, It's also a very choppy currency too, you know, just historically, it tends to chop around. So if you can get euro dollar to an extreme level somewhere, that would be kind of wise. Like this is where my eye takes me. So I'm on a daily chart and I'm zoomed out, but something like this, right, where this was resistance here once, twice, 3, 4 times, and then support. So if you were to get here to like 1.12, 1.11, that could probably be a good cause or a good level to, you know, take the idea of flipping narratives here. So I like that idea, Marco. And one of the cool things about just watching this whole move happen, although it sucks to not be in the trade, what's cool is you can kind of look at everything from an outside lens and not be too married to an idea or too clouded, you know? Because when you're in a trade, you're somewhat biased to an extent. You want it to continue to work or whatever. So I like that idea. But go ahead, Marco. Sorry, I kind of, you were gonna say something.
No, I was going to say the exact same thing. So pretty much buying EU seems like a good thing to do. GU seems like a good candidate as well. But just waiting for that extreme dollar bullishness that could culminate on Thursday with the PC print, because the PC print should print hot. I think that could be a good game plan. What about you? Would you be interested in shorting the dollar, or are you staying out of the game? Out of the dollar game for this week?
So this is how I would play it. Until you get to, so I like to trade zone to zone in currencies because they tend to react to those big zones, especially the higher you go in time frame, like a weekly chart or whatever, monthly chart, the more the currencies respect those zones. So unlike a like an equity chart where they just drift higher, or metals, that's how I approach currency. So with euro dollar, the next zone that I have to be mindful of would be all the way here to 1.12. So until then, I will continue with the narrative of long dollar, right? Yes, oil is lower, things like that, but markets trade on kind of the expectation and what everyone thinks. And right now, everyone's still kind of in that hawkish camp. So as long as that's the case, I will short euro dollar if I get an opportunity into this level here. Once we get here, then I become mindful, and then just see what happens, right? Now, let's say I never get an opportunity and we just shoot down here, which it seems like we're doing, right? We're just kind of moving in a straight line at this point. And we just, you know, go all the way to 1.12. At that point, I would look at price action, see what happens. Do we stall out or whatever? And then wait for some kind of a fundamental change. What usually happens, Marco, is you start to see missed data points in the U.S. You know, GDP comes out lag, or retail sales comes out lag. You see like one or two things, right? And then that's like the first sign of it. I kind of like to be ready in those instances, because if you just get 2 or 3 more things that fail, then, you know, on a relative basis, the US dollar will no longer look as attractive or as strong compared to the euro. So that's kind of what I look for. So again, if I get an opportunity, I will short it into 1.12. However, if I don't, and we just get to 1.12, I will wait to see what happens there. And then I will be very mindful and very attentive to the data releases that's going on in the US.
Well, that's a good game plan. And okay, so what do you think about USD JPY then? Because that thing is close to 162. I would say right at the level of resistance, ready to intervene. So would you be looking to play that, or are you thinking this goes to 167, 67, or 170?
I kind of would, man. I don't know, but like, look at this. Oh, this is a 5-minute chart. Whoops. There was a headline here on Financial Juice. I saw it on my phone. It said suspected intervention, and it was like a big candle of 70 pips. So I made an article about that day. I think you're kind of close, man. And here's the thing: if you have the potential for DXY to start tapping out, right? I think it would really show here at USD/JPY.
Yep.
And coincidentally, it's here at 162. So I kind of am. Last time you had this intervention here, initial one, you had a spike lower, and then what happened? It took it all back. But then you got to 162. And after that one, you had a straight line down. Today, you had an intervention. It snaps lower. Market took it all back and some. Now you're at 162. What comes next? Hopefully, a straight line down, a straight path lower. So I would love to, man. I would love to if you get the right setup. But Marco, I'm here against my time here. I'm at the end of it. Usually I would stick, but I'm running out of breath here. So
no worries.
I'm
no
gonna
problem.
leave it to you, man.
No problem. Well, thank you, Alan, very much for the joint segment. I'm looking forward to seeing you tomorrow. I'm actually in a short on USD/JPY, and I'm looking to scale into it, so to add more size. Wish me luck on the intervention stuff, but yeah, take care and see you tomorrow.
Thank you so much, man. Well, if it starts to play out, I will definitely hop in that trade with you too.
Awesome.
And one thing I would say, guys, we've been talking about this, and I'm sure the past couple days and weeks have been very obvious here. But this tool that I have here on my screen, let me put it up real quick. The Edge Finder helps you so much with your trading, right? I have been sick, I have been ill, so I haven't really been paying too much attention to the articles and everything like that. But all I need to do in that moment is just hop on my computer for 5 minutes, look at top status page, and I know everything that I need to know. So I promise this is a very effective time-saving tool, and it will help you filter and get the best trade setup. So definitely go ahead and get it. I think it's on sale. It may not be, but go ahead and use the code Marco or Aspire, whichever one you desire, and it will help you in your trading. So again, thank you, Marco. Hope you have a blessed one, man.
Yeah, no worries, no worries. See you. Goodbye.
Alrighty, bye-bye.
So I'm sorry, I'm getting alerts on my trading view. Looks like we have some movement in stocks. Show notifications. No, thank you. GH, what's happening with that? This thing is breaking out a little bit. Okay, so let's delete that. Let's see, GH, let's bring it up to the level. Let me see if I can trade it even, because most of these stocks I actually can't trade on my accounts, which is a bit unfortunate. So let's see, GH. No, I don't have it. What about on DarwinX? GH. Oh, on DarwinX there is GH. Okay, well, that is interesting. Anyway, so this thing is starting to break out a little bit. Although the breakout is not really convincing, like it gapped up a little bit. I would like to see some more follow through, and then I would consider taking a buy position on this. I'm also in CAT, which is Caterpillar. I'm in GFS, which is in drawdown. So CAT is actually in profit. GFS is in drawdown, and then I'm looking at some other stuff here. So looking for breakouts, but the only one that is breaking out is GH. So let's put a yellow flag on there. SITM, MTSI. Okay, this one is breaking out as well. So this is LLY, and it's breaking out of this sort of triangle. So it's looking nice. I'm going to put this one up top, give it the yellow flag as well. What else do we have? No. No. And this one, maybe. This one is a maybe. DHC. So let's put the an orange flag. Okay, I'm gonna check it out after my segment ends. I don't want to bother you too much, but how is the DarwinX doing? It's okay, it's fine. So my ticker is OHGE if you want to find it on the platform. So just go to DarwinX 0, type OHGE, okay? So, and then you'll find my ticker. As far as the regular positions go, let's also remove the 10, remove the 50. I'm in a short on USD JPY, and I very much like this position. The big downside about it is, of course, so the downside is swaps. We have high negative swaps while holding this position, but it is still, I would say, a good trade to hold for the 2, 3, maybe 4 weeks. You know, we are close to 162. There's a very high chance we print at 162 and then we get the big intervention. I'm also starting to become bearish on the US dollar. I think the dollar bullishness has gone to an extreme. I believe that the markets are pricing in hikes when they should be pricing in a neutral Fed or maybe even a dovish Fed. So if you look at the edge finder and you look at the inflation print, NAS 100 is flying. What? I don't know. I wouldn't say this is flying, but okay. Economic data, inflation, CPI. So USD CPI, you can see it's increasing. So 3.3, 3.8, 4.2. But most of this is caused by the price of energy. So energy is putting a pressure on inflation. Most of that is caused by the Strait of Hormuz. What is happening right now? The Strait of Hormuz is open. Ships are passing through. Brent is down. So Brent is down to the previous level. Brent is the best indicator for the Middle East conflict. It is now down to the previous level. Okay, that is a very, very good sign right there. That is a very positive sign. So in my opinion, the Fed doesn't have to be as hawkish as people expect. The Fed can be neutral or maybe even cut rates, because personally I believe that the inflation pressure will subside. So the energy prices have gone down, the inflation pressure should subside. How can you trade that? Well, you can look at the 2-year yield. You can basically bet that this thing goes down. Let's look at the 20-year as well, because TLT means trading the 20-year yield. Yeah, this is not a good trade. This would be TLT. So on my brokers, I can buy TLT. But the main bet is for this to go down. You can do it for the DXY. So there is a big correlation or a high correlation between the 2-year yield and the DXY. So what I'm personally looking to do is I'm looking to fade this strength right here. I think we could get a bit of a correction, a bit of a pullback, maybe just to the 20 MA, but that is definitely tradable, right? Even stocks have paused a bit. So the S&P had a big drop yesterday. Now it's up on the day. Okay, Nasdaq break even on the day, had a big red day yesterday. I think the semiconductor industry is in a lot of trouble. We're also supposed to get earnings for Micron, MU. So I think earnings are coming. So reports after the US close. Okay, so yeah, let's see the earnings for Micron. This is a big player, I believe, in the semiconductor industry. Yeah, I was looking for a breakout here, I'm guessing, because I have some lines on the chart there, but this was actually a pretty good trade. So you got a triangle pattern right here, and then the blue candle is the breakout. You buy on the breakout, and then you basically put the stop loss below the day's low, and you trail it. You trail the stop loss below the 20 MA. My game plan is this. Let's try to keep it simple. So I'm in USD JPY short. That's betting on an intervention, but also it's betting that there's dollar weakness in the future. I'm looking to add more to my dollar weakness game plan. A good thing to buy would be GU, for example. We are sitting right at this level of support. Euro dollar is another valid trade, so buying at the level of support or buying right here, let's say. USD CAD, selling that, shorting that could be a smart play. NZD USD, NZUSD, yeah, buying that could be a smart play as well. I think GU is the best one because it's sitting right dab smack in the middle of the support. So I think that could be the highest probability trade, but you can do multiple positions. You don't have to just focus on GU. You can do, I don't know, GU, EU, and NU, right? And you can spread out the risk. So if you want to get all of my trades, if you want to get notified when I take a position, make sure you join the A1 Discord. There's a link in the description of the stream, and you can use the code Marco to get 25% off. So there's a very high chance I'll take a position tomorrow or on Friday. And if you want to be notified, definitely join us in the A1 Discord. I also want to mention the sponsor of today's video, which is going to be Ola Prime. So Ola Prime is a prop firm. And first, if you look at their Trustpilot, they have a score of 4.6. If you know anything about the prop firm industry, a 4.6 score is very, very high. So that's a green flag right there. Second green flag is that they don't have the consistency rule on some of their account types, which means you can't have a massive winning day. It's not going to impact how much you can withdraw. The consistency rule basically tells you can't have days where you make a big amount of money and then make small amounts on the rest of days. So for swing traders, that is pretty much a death sentence, unfortunately. And the final part is you can get 35% off with the code A1 Live. Okay, so 35% off Ola Prime. There is a link in the description. And I would say Ola Prime is a direct competitor with FTMO. I know it's a new company, but they're doing really well. They have good reviews and a lot of clients as well, which is good. So a direct competitor, but with the code A1 Live, they have a much, much better price. So FTMO is pretty expensive. I would say even maybe the most expensive company. And this one, you get a big discount, but you get very, very similar trading conditions with Ola Prime. Okay. What else can we cover? I still have 3 more minutes. We can do equities. So Nikkei is on the watch list. I would be interested in potential buy positions. Let me run it through the top setups page. So Nikkei, neutral score, which is a problem for me. I would first wait for a bullish score on the Nikkei. Let's look at the SPX. Bullish, okay, that's fine. What about the NAS? NAS is neutral at the moment. So yeah, the Nikkei is my favorite out of all 3. I think it has already been crushing up. I think it's going to continue to outperform the US. So it's beating the S&P, it's beating the Nasdaq. If you look at the last few years of performance, I like this level. This is a good level of support. But the last thing I'm looking at or waiting for is for the edge finder to print bullish. So for this to go to a 5 and for the bias to flip bullish, then it's on. So then it fits the plan to take a buy position. I mean, we were just around the 20 MA, so it's not like we had a massive crash. We had a pullback, yes, but it's not a huge deal. And it wasn't a falling knife. So it wasn't like a massive red candle on the daily chart that looks bigger than every single other candle on the screen. It was, I would say, a healthy correction, a healthy pullback, very similar to what we got on the 6th of June. So maybe some profit taking, maybe some people getting scared about a possible hawkish Fed and hawkish central banks all over the world. But I would say there's no need to be hawkish. You know, the Strait of Hormuz is open. Inflation pressures are supposed to subside. And central banks could flip back to possibly being more dovish and cutting rates, especially the Fed. I'm looking at you, Fed, because the Fed was supposed to cut in 2026 before the Middle East happened. And now the markets are pricing in 1 to 2 rate hikes. So I would say that's too much, too extreme, especially because the Middle East seems to be behind us. So yeah, those are my thoughts. Again, 3 best trades for this week is selling USD JPY, buying GU because it's at a good level, but I would wait a bit. I would wait for tomorrow. I would wait for after the PCE print and buying the Nikkei if we do get the bullish edge finder print. Okay? So that's it for me. I have ran out of time. Thank you very much for watching. Do not go anywhere because you have James coming on in 30 seconds. I wish you good luck. Join me in the Discord if you want to get all of my positions, and I will see you tomorrow. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello, hello. Happy Wednesday, ladies and gentlemen. Hope everyone's well. Hope you're all having a good week so far. So I saw a message, why is GBP so strong? I'm not sure if Marco answered that question, but basically it comes down to the political stability situation we've been going through. So because we've got Starmer stepping down or resigning, that whole situation of will he, won't he leave, that was a big question mark in the market, really, or a big question mark regarding certainty and uncertainty. Now we've got confirmation he is resigning, and we have, what's his name? Andrew or Andy, someone, I can't remember his last name, Andy coming in to take over as PM, or likely to take over. It's removed a lot of that uncertainty. However, it's not a long-term fix. There are still a lot of issues going on with the UK. So let me read the overview I've got here. Sterling stability hinges on Starmer resignation clarification and Andy Burnham, that's his name, ascension, which removes near-term political uncertainty, but introduces fiscal expansion concerns as UK deficit already exceeds 3.5% of GDP. The Bank of England holds at 3.75, and accelerating labour market weakness now embedded easing into the 30th of July decision. So this is what I mean. The GBP might be strong short term. However, I'm not expecting it to be a long-term solution. The PM that we are likely going to get, this Andy Burnham guy, is much more left-wing than what Keir Starmer was. So to be honest, from a economic standpoint, over the next 6 to 12 months, depending on when he resigns, I'm going to underline the word when and not if, because, history repeats. I think the UK, or the sterling, is set to continue lower over time. Anyway, euro dollar continues lower today along with the other dollar pairs. So I'm almost to take profit here. I've still got my stops at break even. I haven't trailed any further than that. Excuse me. So I'm looking for around 1.2. Well, not around. I'm looking for 1.2 to get hit. That's where I've set a take profit at. And the reason 1.2 is because it's just a really nice weekly level of support. So if we look here to the left, we got previous weekly low, previously used as resistance through here, and then it was also minor support over here as well, and a little bit of resistance there. So I think it's just a nice sort of magnet level, if you will, whatever type of terminology you want to use is fine. But I do think 1.2 holds some weight in the market, and we've obviously broken 1.14, which was, the support. If that was going to hold, I think it obviously would have held, not broken with the momentum it did have coming into it. So from here, because the market is now really extended and the dollar is retesting 102 at this point, or almost retesting 102, sorry, on the DXY, I would expect a little bit of a rebound. Nothing crazy. I wouldn't expect to get stopped out at break even here. That would surprise me quite a lot, actually. Maybe a retest of 1.14 and then a continuation down towards 1.12. Or maybe a slightly deeper pullback towards 1.15 and then a continuation lower from there. I don't see a world at the moment where the dollar just completely reverses. I think we've got too many factors in favor for the dollar. Again, the hawkish Fed, even if we put the Fed aside, the US dollar fundamental data, as we see on the Edge Finder here, is very strong on its own as well. So I think we're in a very good situation really to just continue dollar long positions. Again, if you're not in a position already on things like pound dollar, Australian dollar, or US dollar, gold, euro dollar, you've kind of missed the move for now. We might see the pullback if we do see a really clean pullback and some sort of rejection. So let's see. So this actually looks quite nice. So if we draw the fib roughly from the high, I think I've misdrew it slightly there, but from the high to the low, a pullback to the 61.8 would meet the previous support level. And if we could see a rejection from within this fib zone, that would be a really good indicator for me to actually add another position in here and start riding towards 1.12. So that's the rundown. I did take a short position on US 30 as well last night. Now this one isn't really a fundamental trade. In fact, if anything, it's actually going against the fundamentals. So the edge finder is giving the Dow a bullish reading. But the reason I took this position is because what we saw is the Nasdaq and the S&P take a little bit of a hit yesterday. And we're also seeing SpaceX down. So this move here, I was looking to see, can we see the US 30 follow in the same footsteps and have a little bit of a bleed to the downside. Nothing crazy. I'm not positioning for a crash here. But pairing that with the hawkish Fed as well, I was happy to take a little attempt. I've not got much money riding on this one. But I am also long on the DAX as well. So from a very basic risk side of things, obviously, more risk off on the US 30, more risk on the DAX position. So if one doesn't work, the other one likely will work. Of course, they're not correlated in terms of like a one-to-one correlation, but more on the general gist of the idea, I think is okay to take a small attempt on both. The Nikkei seems to be sort of bottoming out here. I've not managed to get an entry. I really want to see a bit of a deeper pullback to correct back into this market gap and fill. That hasn't happened yet. So I'm still sat on the sidelines on the Nikkei, which is a little bit frustrating. But what can you do? Okay, so GP strong due to decrease in political pressure, and JP Morgan's bullish on the pound. JP Morgan's wrong. But yes, I do think short term bullish pound isn't a terrible idea. But again, I just don't see how you could be bullish on the UK. It's just, it's just a mess. I talk about it all the time. I'm not going to go over it once again, but it's just a really tricky economy to try and fix, to be honest with you. So gold, I'm kind of just sat on the sidelines here. Can't justify doing anything. We've already had to move to the downside. I would really need to see I'd really need to see a new lower low get printed. Then I could draw the fib from that low, wait for a pullback into the fib, and then continuation to the downside. Basically, the same idea we've got with euro dollar, just continuing dollar longs. But short term, I'm a little bit concerned about 102 on the dollar. I think what is likely to happen here is we come to 102, we see a rejection, we come back down and retest these highs, and then we continue from that point. I think the move we've had over the past sort of 7 days, has been a little bit too aggressive. You know, the markets are very efficient, and they do often like to correct sort of aggressive, impulsive moves like what we saw on during the Fed. So it's possible. I'm not saying that's really what I want to see, but it wouldn't surprise me, to be honest. And then we continue higher. So short term, slightly bearish actually, but more just from a price action perspective. And then longer term, I'm still very bullish, at least up until I want to say 105. And then if we can continue higher from 105, maybe 110. But then if we just zoom out slightly, we do need to pay attention to these lower highs that have been formed. I don't think I've spoken about these actually before. Other people may have done, but I didn't. So a little bit worried we might see something like this, or we actually just get trapped in this sort of triangle sort of idea. I don't think that's overly likely, to be honest, but again, it's just something to keep in mind. So moving forwards, there's not really anything new going on from my side that we haven't already spoken about. The ideas are all exactly the same. I'm just still looking to buy the dollar. However, right now, I'd rather just wait for a little bit because, as I said, I think the dollar's a little bit exhausted. I think it needs to have a bit of a chill out, and then we can continue higher after a little pullback. So let's see what the Edge Finder is reading for us today. Just give me one moment. Sorry about that. So Russell's bullish. We're still seeing the general risk on sentiment on the Edge Finder. So Russell, UK 100, Dow, S&P as well. So overall, I think it's safe to say that we can continue looking to buy the equities or the indices markets, look to buy the dollar. But what I've just noticed actually is the Australian dollar New Zealand is getting a bullish reading, but the Australian dollar is getting a bearish reading. So I think I would have to sit out of Australian dollar New Zealand. I just don't really feel comfortable buying that market at the moment. What else do we have? Dollar yen's bullish. I've not paid much attention to dollar yen today. Let's see what's going on. Still climbing higher slightly. We are a little bit sideways at the moment, but what I would imagine is going on, because the dollar is still doing very well. And obviously dollar yen has still been climbing to the upside on the back of that. Obviously the weaker yen, of course. But I would imagine that market participants are now getting a little bit worried about dollar yen, because I would imagine, and this is complete speculation, I don't have any proof to back up this idea, but I think it's more a case at the moment of no one really wants to buy dollar yen at 161.7 because the risk of an intervention is still fully alive. Do you see what I'm saying? It's like a case of, do you want to buy here when the interventions have previously happened between sort of 160 and 160.5, or would you rather wait a little bit for the potential intervention that, again, is still very likely to happen, and then just actually buy it lower? So I think it's more of a case of people actually just waiting for the MF to do something rather than still piling into dollar yen longs. Again, just my thoughts. I've got no real evidence to back that up. However, if we go over to the CME FedWatch tool, by the way, I got a Stream Deck. Look at this. So I feel like a proper what do you call it? Proper streamer. I mean, I can't do any cool transitions on this, unfortunately, but you know, I can open CME FedWatch tool very quickly. It's super efficient. Okay, so what were we talking about? The Fed. So we're seeing quite aggressive pricing in of a rate hike, basically through, well, from now up until 2027. So I think it was Q2 2027 that we're expecting 2 rate hikes, or two rate hikes. 25 basis points and another 25 basis points of rate hikes. So the July meeting, we have a 32.1% probability of a hike. And then if we go to December, I mean, September, October, December, we're expecting hikes throughout the whole thing. And then we get to December, where we've got 39.5% probability. We start looking into 2027, and we're seeing basically the same thing. So there is no rate cuts expected now from the Fed, which is a bit of a change of tune. If you remember the start of the year, we were kind of expecting the Fed to cut rates. And that seems to have completely flipped, which again is a really good dynamic for the dollar. So we've obviously had those rate cuts priced out, but not only that, we've got the rate hikes pricing in, or getting priced in quite aggressively. And this is one of the beautiful things, actually. If you understand sort of the harmony the markets have with rates, you can start positioning quite well. So if you were to look at the previous expectation or the previous probabilities of the Fed rate hikes, you know, at the start of the year up until now, for example, you will see a very close correlation between the increase in expectations and obviously the US dollar value. So you can see as these expectations have been increased, and dollar has been going up. Now, you know, that is super simple sort of market dynamics. We should all understand that. But for any new traders, I would seriously look into the relationship that interest rate probabilities and expectations have on the value of currencies. Because if you can figure out when a central bank is likely to start pivoting, you have a massive, I don't want to say advantage, because that's not really the right word, but you have a big skill in your favor, I suppose we should say. Anyway, what else do we have? So as I said, I don't really want to go long on the risk assets like the Russell, the Dow, and the S&P, just because the Fed is more hawkish. I don't feel comfortable when I'm trading these markets. Like it's similar with gold. I like to see sort of harmony and a smooth environment. But right now, I don't want to buy US indices while the Fed is expected to hike rates. It's just not an ideal environment for me to be involved with personally. So I think when it comes to these markets, I'm not really looking to do anything. I am obviously short on the Dow, as I said, but it's a tiny position. It's just a little bit of a will it, won't it fall? Not a problem really if it doesn't work out. So I'd like to see a pullback to these previous all-time highs into 7,000, and then maybe I could be a buyer from that point. Until then, I can't really justify doing anything. You know, from a technical basis, we've actually formed a lower high. So yeah, I'm just not super comfortable with it, to be honest with you. So I'm going to sit away from those. The UK 100, we spoke about this as well, I think yesterday, and I also did covered it in my Sunday YouTube video. So this one's looking okay. There is a slight expectation we can see the Bank of England turn a bit more dovish, especially compared to like the Fed. So if we could expect maybe a slightly lower rates by the Bank of England. Oops, that's the wrong direction. There is an idea of being long the FTSE, and I was looking at the start of the week at this setup here. So obviously pull back into the fib, looking to enter on 50% retracement. I did quite like it because, you know, the edge finder's bullish. I'm not overly optimistic that the Bank of England can hike rates, or at least even turn hawkish necessarily. So it kind of made sense to be a buyer. But then the FTSE is just a very tricky market to trade. You know, it looks okay in situations like this, but to be perfectly honest, it's not that often the FTSE has a really clean rally. You know, look at this. This has been, what's this? Since March, the FTSE's done nothing but move sideways. Excuse me. Over here, this was like a 9-month range, something crazy like that. And these trends, you know, over here, this is slight trend to the downside, but even so, it's horrible. It's really sort of untradeable environment. So just based on the behavior that the FTSE follows, I didn't really want to get involved. In hindsight, probably the wrong decision to make, but again, you've kind of just got, as a discretional trader, you've got to just do the best you can. And that was my decision to make. So that's the FTSE. What else do we have? So pound dollar, we've kind of discussed. Euro dollar, there really isn't anything to say about these last 4 markets here. You know, buy dollar. What else? What else is there to say? Not financial advice, of course. But euro dollar is still holding on to that the most bearish reading, which is fantastic. So that's one of the reasons I'm still in a short position. Pound dollar is bearish. New Zealand US dollar, Australian dollar US dollar. Again, I think it's more just a case of waiting for pullbacks in these markets and looking to go short. Keep it really simple. You know, I don't want to sound like a broken record, and I've said this multiple times, but I just do not see really a world at the moment where the dollar just suddenly flips bearish. I just do not think that's going to happen. Of course, we might see these pullbacks, which is actually what I kind of do want to see, just so I can add into euro dollar. But even if we get the pullback, I still fully expect a break above 102 and a continuation up towards 105. And at that point, I very likely will hit take profit on euro dollar, which would be lovely, even though we are seeing a little bit of a bid here. But again, you know, if we pull up the RSI here, the H4 is extremely oversold. The daily is a little bit oversold. The weekly, not so much. But yeah, these lower timeframes definitely stretched. So I think a pullback is kind of warranted at this point. Okay, so we've got about 10 minutes left. I'm just thinking if there's anything specifically I need to cover. I don't think there is. We could look at Australian dollar, New Zealand, because I was bearish on that market for a little bit and it didn't really do anything. So yeah, this was sort of the position. It was something along these lines that I had going on. Held the position throughout all of this profit. Then it came back to break even. Then it came back down its profit. And then I ended up closing it right here, basically break even, obviously, if we count for the swaps as well. So I'm glad I got out because it would have been in drawdown now. So if we're following the edge finder, and again, keeping things super simple rather than trying to overanalyze and look into central banks and things, and just follows the edge finder and the trend, which is completely valid to do. Draw the fib from the low to the high. There was actually an entry, obviously, you know, in hindsight, there was an entry here in the fib zone, but I'm still really cautious on this market because of the weekly level that we've got. So if we look, where was it? Right here. Let me turn this to resistance. This level previously was quite a strong support level. Then obviously we broke below. And the fact that we have now come to it and we're seeing this consolidation, it just makes me think, have the buyers run out of steam? Maybe. I still think the fundamentals are slightly supportive for buyers, to be honest with you. But it's just not a market that I'd really want to get involved with at this point. I think the main rally or the main run it's already happened. So, you know, it's done and dusted, I think, at the moment anyway. That could obviously change. So what else do we have? Pound New Zealand's bullish, which is interesting. Let's take a look at that one. Where is it here? What do we have going on? So monthly, technically bearish, but it does look a little bit more bullish. Weekly's bullish. The daily, yeah, slightly bullish. The H4 looks okay. So actually, there may be a setup here. Maybe. Let's see. If we draw the fib from the low to the high, and then if there's anything inside the fib zone, there kind of is. So actually, let's get rid of this level here. Maybe there's something like this. I quite like the idea, actually. So because I'm bearish on the pound, it might be a decent idea to actually hedge some of that risk by going long on the pound as well. So for example, if I went short pound dollar and short, I don't know, pound against something else, I'm not sure. I don't really have another one I want to go short against at the moment. This could act as a little bit of a hedge against the UK weakness in case, you know, the optimism around the political stability goes on for longer than I expected. This could be a decent position again because it's on the edge finder. The trend on the H4 looks really healthy. There's a really valid technical entry as well. I think it's fine. So actually, I'm gonna I'll bookmark this one just so I can keep an eye on that one going forwards. Dollar yen we've already spoken about. I'm not looking to do anything in that market just yet. New Zealand yen, New Zealand CAD. Let's take a look at New Zealand CAD. Actually, just before we do that, let's take a look at oil. Oil is getting hammered, which isn't a huge surprise. You know, I think we should have really have all expected oil to start heading back down to its pre-war price. I was talking about this sort of when we had those de-escalation talks, when, you know, talks of the peace deal and so on and so on. So I think, yeah, it's more than valid. So that is also going to feed into the weaker Canadian dollar. What market was it we were looking at? New Zealand CAD. Okay. Yeah, to be honest with you, New Zealand CAD feels a little bit more like trading two weak currencies against each other. I do think the Canadian dollar is weaker than the New Zealand dollar. So do I want to go short? Not really, to be honest. From a fundamental view, maybe it does make sense. But just given the oil is having a little bit of a collapse, if that's the right word, I'm not sure I would want to buy the Canadian dollar against the New Zealand dollar. And technically speaking, it's not looking fantastic. There is actually maybe a little bit of a saving grace on a technical side here, which is the break of the previous lows. So if you're a technical trader, like you know, trend lines, like Tory trades, you might want to look for some sort of retest of the trend line. Maybe there's some sort of idea like that. That's not the way I trade, so I'm not 100% sure on exactly what type of things you would look for in that approach. But maybe there's something along those lines. Not for me, though. New Zealand Swiss. Big question mark on that one. Horrible. I mean, what can we do here? Very sideways. I mean, I would say this is very similar to just trying to trade the pound Swiss in terms of overall, you would want to be a seller. I mean, it's very simple. Monthly time frame is very bearish. Weekly is very bearish. Daily is very bearish previously, but we've just been stuck in this horrible range of just no direction, basically all year. In fact, even longer than that, actually. So basically since, December of 2025, this market's just not moved at all, you know. So again, just based on like the way that I trade, momentum, trends, pullbacks, I cannot get into this. So I'm going to have to just leave that one on the sidelines, unfortunately. And that kind of just brings us back around to the dollar pairs. So when it comes to gold, I think we already spoke about gold, but I do think shorts are just the easiest way to go. We are actually starting to form a bearish trend here, not fully, but we do have the 100 and the 50 EMAs on the daily that have actually flipped into a bearish trend. We're now seeing the 50 and the 200 starting to sort of intersect or beginning to look like they want to. So there is ideas really that gold might have a little bit of a further move to the downside, pull back, retest the 200 again, and then actually just continue lower towards maybe 3,500. So I think, gold keep it simple. And yeah, short positions are kind of the easiest way to go. Australian dollar, New Zealand, I can't really find anything here, to be honest. Maybe on the daily, let's see. Not really. I suppose there's a couple of things going on here, actually. We could draw the fib from the daily high to the low. That would give a relatively nice support, a relatively nice structure level here at the previous support. So we could have, the break and retest type pattern. But what's a little bit concerning for me is this 200 daily moving average. We're seeing a little bit of a rejection here. Now, obviously, that doesn't mean the market is now going to flip bullish, but it is just a little bit of a concern. So we line up the 200 moving average with the oversold RSI. It does tell me we do want to see a little bit of a retracement back to the upside. So I think, yeah, maybe something like this is okay. So wait for a pullback, let the RSI cool off a bit, bounce off the 200, then we come back down and actually break the 200 and hold below. I think that would make a little bit more sense. Dollar CAD, again, cannot do anything here, just running to the upside relentlessly, just a continuous rally. So yeah, I think it's quite futile, really, to try and get a position here, because sorry, I should reword that. It's futile for me to try and get a position here because obviously, again, the way I trade, I need to see the pullbacks. There's definitely momentum, there's definitely direction and trend, but there is no clear highs and lows really to draw a fib and wait for a measured pullback or a nice 50% retracement. Because when we're getting this sort of micro structure, these micro lows, where are we supposed to draw a fib? Well, to be honest, I haven't found an answer for that. So in a case like this, I have to just ignore it and just move on to a different market. Pound dollar has got two ideas, I suppose. You could either look for the sort of major high or swing high, or again, whatever terminology you like to use, this H4 high up here, obviously to the low, and that fib zone would line up with the previous support really nicely. Or there is maybe a bit more of an aggressive idea where we actually just take the most recent H4 high, which is here, to the low, and maybe look for a position like this. It really depends, I suppose, on how deep do you think the dollar correction will be, or do you think we're going to get one at all? Because it could be a situation where we do get, oops, that wasn't, how do I do that? It might be a situation where we do get actually a little bit of upside, and then we just continue to rally back to the downside, kind of like what we saw over here when we first broke the when we first broke support, and maybe similar to this, where we just get these really small pullbacks that we can't really do anything with. Excuse me. So yeah, I mean, it depends. If you're willing to take a bit more risk and you're willing to be a bit more aggressive, this might be the way to go. Again, not financial advice, just my opinion. However, if you're more conservative, I would say this is probably a more reliable entry, if you will. And then that brings us back around to pound New Zealand. So we're pretty much set for the next couple of days. When it comes to euro dollar, as I said, I would be actually really happy to scale into this trade because I'm now risk free. I've got nothing stopping me adding, maybe 0.5 risk on. Even if that doesn't work out, I'll trail stops obviously before that happens. So if we did see a pullback and let's say a rejection of the fib, so let's say, actually I'll use an arrow. So let's say we see something like this where we come back up to 61.8 and we see a really smooth technical rejection. I'll be quite happy to set trail stops down to probably this high, and then look for an entry, something like this. And that way I can just add a bit more risk in, lock some profit in these ones. So absolute worst case, I'll make a little bit of money, which obviously isn't ideal. But that is obviously, again, worst case scenario if this plan doesn't work out. However, there is obviously then just this very simple idea of not scaling in and just letting both the positions run down to 1.2. Either way, I think both ideas are completely fine to go with. There's nothing really to do for me on US 30. I am happy to hold it. Again, I've not really taken much risk on this one at all. It's more just a, will it happen? Will it not? More of a little bet on the side. So if it runs to stop, fine. I mean, I've gone against the fundamentals. I've gone against the trend. If it works out, that's completely fine. Because if we start seeing, these lows getting broken, so let's say we start printing these lower lows and lower highs, there is actually the potential that I would have essentially top ticked a reversal on the S&P, on the Dow. That's not really the idea. I'm not banking on like a new massive correction down or a crash or anything like that. But I do think we are seeing a little bit of pressure in these markets, which I would quite like to benefit from if if it plays out, of course. So again, we'll just have to see. The DAX isn't looking very good, to be honest. So again, there's not really anything I can do just yet because I want to see how it reacts to this 200 moving average. Either it acts as a dynamic support and we just continue to run higher from there, or it just completely breaks, in which case I'll cut the trade if it breaks a 200. And maybe, you know, if we start seeing it pull back after that, I could get back into the position. But yeah, the DAX isn't something I'm overly interested in being involved with. So yeah, I'm kind of playing both sides of the risk sentiment, if you will. Anyway, ladies and gentlemen, we have got, who's on next? Tiger. We've got Tiger coming to take over the show, ladies and gentlemen. So have a fantastic rest of your days. Thank you for being here. I will see you all tomorrow. Stay safe and don't get margin called.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, what's going on, everybody? Happy Wednesday, happy hump day. Hope you're all doing well. On here to close out the show for you guys. So definitely let me know of any tickers that you are interested in. I already know somebody's going to say gold, so we'll definitely check out some gold. Yeah, guys, dollar is just flying off the charts lately. It is getting close, though, I think, to a little bit of overhead resistance. Talking about a little bit of daily supply. But I don't think I'm really too worried about it until we start getting a little higher into that red rectangle, which is basically the 4-hour confluence. So, you know, obviously supply and demand works a little different on the indices because we don't trade the actual index itself as far as the Dixie, the Bixie, you know, that's what the currency futures are for. But when it comes to the indexes, however you guys say that, I still pay attention to it just because they can be potential support resistance areas. So, again, we still got a little ways to go before we do get into this 4-hour kind of confluence point right here on the Dixie, looking at the 102.5 area, 102.50. So still a little ways to go, but there's just no denying this thing is an absolute rocket ship right now. So I did a little digging. I just wanted to kind of understand it a little more, reasons for all this U.S. dollar strength. And it really came down to a few things. Obviously, the hawkish Fed under Kevin Warsh, pricing in those possible rate hikes that we've been hearing about over the last several weeks. Resilient U.S. economy. Obviously, the stronger than expected data, the labor market, all the fundamental analysis that we have on the Edge Finder that you guys see every day. Safe haven flows. The recent stock market weakness, especially that tech rotation we've seen. I think Nick pointed out pretty well yesterday when he was talking about the new SpaceX ticker. On TradingView, opened at 150, shot up over 220 or something like that, and it pretty much retraced itself all the way down. So that's just one example of it. But then, of course, the higher short-term yields, pushing higher, widening the interest rate advantage over other major currencies. And then relative strength. Okay, other banks, RBA's on hold. BOJ, of course, is doing their intervention. So there's just a little bit of uncertainty out there. And not to mention, we have the peace deal. But as you guys have probably seen on all the legacy news outlets, there's a lot of questions, and it doesn't sound like Iran and the U.S. are agreeing on what they talked about behind closed doors. It's like they're appealing to their own specific audiences, whether it's Iran, U.S., whatever. So what's the truth? Probably somewhere in the middle, right? So just a little bit of uncertainty there. But all that, of course, attributes to the safe haven flow, the safe haven dollar. So it's getting quite strong. But again, I do see some overhead resistance spots coming in, just not quite there yet. I mean, we have already on the daily chart kind of bounced into the daily I was talking about way back, not too long after it was even created, talking about this doji candle here, this indecision candle. It did close closer to the top of the range of that candle, the daily candle, but then we just had that big ugly drop to the downside. And again, we did bounce in just a little bit before we got that retrace and push back down. So what I did, I just put a dash line at the top of that and bringing price forward, just wanted to see what happens when we get a little deeper. So again, that's really my kind of focal point right now, the 102 half level, just to see if we do finally end up getting some type of retracement or just a slowdown, whatever, okay, whether it goes down or whether it continues, but could definitely see a little bit of a pause or a little bit of hiccup if we start getting up into that area on the Dixie. And that's just the technical look of it. But again, there's no denying the fundamentals. There's no denying what the COT report told us as far as all the additional positioning that the banks did accumulate to the tune of 12%. So that's quite the spike up, guys. And both numbers were bullish. 3,200 longs added, which is bullish by itself. 8,500 shorts covered, which is bullish by itself. Add that together, pretty strong percentages. Dollar is looking pretty darn good. So, so that's just a little bit of a, I guess you could say, a 30,000 foot view of kind of what I'm looking at when it comes to the dollar. But yeah, we can definitely dig into some of these other pairs as far as the dollar-based pairs go and see what we got. So there's a couple little changes here and there that have kind of happened on some of these pairs where the dollar is the quote currency, so the second currency. And for Aussie dollar, it really kind of one thing that I did notice as compared to yesterday when I streamed is, you guys remember I drew up this X. I drew it up on this 4-hour zone right here. Okay. Meaning I wasn't too interested in that zone because I thought for sure this demand would have probably at least stopped it at its tracks somewhat. It just cut through it like a hot knife through butter. This is the 4-hour confluence. And now we are obviously digging down a little deeper into the daily and then the weekly, which is kind of the orange box here. That's weekly, daily, 4-hour confluence. Well, it took out one of the main ones. Now, obviously, you guys know weekly and daily are stronger than a 4-hour, but for me, the 4-hour is just one of the main ones I use all day, every day. Okay, if we've got strength, to chew through that, well, then let's take a look and see what the source of that power is. We hadn't broken through it yet yesterday, so that's why I put the X right here, saying I didn't really care about that supply. Was more interested in what the red projection candle says, which is, hey, let's get if we get a push back up. We'd like to see a little bit of liquidity hunts, little manipulation up here before bouncing into that overhead. It was basically a 2-hour daily confluence up here for possible shorts. Since we are still getting quite the bearish look on Aussie dollar. But now that we've broken through the 4-hour and we are kind of chewing pretty deep and into the daily and a lot deeper into the weekly, okay, well, there's some strength there. So at that point, I'm going to do this. I'm going to delete that X. And that supply zone, in my opinion, is back on the board as a possible spot to short. So drew up the yellow projection. That's what I'd like to see. I would like to see price chew through and actually close underneath all this. But even if it in reality only closes below the daily, that'll still be in play. But it's already closed below the 4-hour. It just didn't even give it any second thought. So that right there kind of opened my eyes into this zone again just a little bit more. Okay, there's no denying the strength of this expanded range candle up here. The yellow VSA candle, I mean, much larger, much larger than the most recent candles. And again, guys, that's one of the biggest factors in determining the color of these candles is how much bigger is it compared to the most recent candles? How much more tick volume, how many more trades, how many more transactions took place in that candle relative to the most recent candles? So that's a really big thing. In fact, sometimes I'll even trade a green candle if it's much larger than the most recent candles, but not too often. Usually all about the yellow and the red candles. You just don't get as many red candles. They're farther and fewer in between. So we get a lot of these opportunities, or I do anyway, when it comes to the way I trade, off of the yellow candles, just saying, hey, during that time period, during that candle, volume was 2x, 3x bigger than the average of the most recent candles. And that's what I want to see. Where is the smart money potentially stepping into the market? Where are they potentially trying to distribute up here, since they're trying to push price down? And since price dropped like crazy with that volume, see if we can get a retracement up to join in if they go round 2 and start adding more shorts into that area. So anyway, yeah, I say all that to say that since we broke through the 4-hour, that's at least going to open my eyes back to this supply zone. That's Aussie dollar. Going to keep an eye on that. In fact, I actually need to steal my alert and bring it back down here. There we go. All right. So now it'll yell and scream at me if we get a move there. So we'll let that be. Having a look at the edge finder. Obviously, Aussie dollar is down. Now we do have Aussie data coming out tonight. As you guys know, we do have the labor data, employment change right down here, and the unemployment rate. We had a red box. If we look at the Aussie dollar on the heat map, we had a red box for the unemployment rate because they did have I think it was a 4.5 against a 4.3 projection, if I remember right. Let's go double check my memory over here. Here we go. Having a look at the unemployment rate. Yeah. So 4.5 against the 4.3 previous and forecast. So the last time we got it was bearish. And that's why it's, again, that's why Aussie is in the basement right now as far as the weakest currencies. Taking a look at the surprise index over here. Tied with the euro. The euro got weaker as well with some of its weaker data coming in of late. So Aussie and euro, they're having a party in the basement. Still got the yen up top, still got the dollar. Canada's strengthening a little bit, Swissy as well. So that's going to be just kind of a real-time look at your currency strength there. And so anyway, yeah, like I said, if this comes into fruition at all, then we could possibly get a green box or at least a neutral box to maybe pull that Aussie dollar out of the basement, even if it does just go neutral, even if it does meet expectations on the dot. So we could see that by 50%, somewhere in that 50% area by the time we get on live stream tomorrow. So we'll see. But and I'm not saying that would necessarily affect this Aussie dollar short, but I would be okay with it. I would be okay if that was a bullish report, because then perhaps that could be the catalyst that gives the Aussie just a little bit of temporary strength to the upside to find my supply so I can take the other side of the trade. I mean, when we get a bearish score like this, very bearish, -9, and then we get some positive Aussie data, yeah, that's going to probably drop to a -8, -7. Okay, but it's still going to be a bearish bias, right? So that's kind of the way I like to play the edge finder scoring. When we get positive Aussie news, you're naturally going to have a lot of people buying the Aussie. And they could take the other side of the argument for the dollar and say, hey, well, yeah, we've got good data, but we got a signed deal. Maybe they're not paying attention to all the nuances of the kind of bickering back and forth between Iran and the U.S. within their respective medias. So maybe they would take the other side of that trade, and not to mention the demand zones where these unfilled orders are. Could give us a boost, whether it is the daily that helps catch a bid, whether it is the bottom part of the weekly that helps it catch a bid. We don't know. But anyway, I say all that to say that I would actually like to see a positive Aussie data come out tonight so that we can start doing like what this yellow projection line is doing, push price back up, temporary Aussie strength bounce into my zone, and then flip and take the other side of it, push down. Because at the end of the day, again, even if that is a bullish results, it's still going to be, Aussie dollar rather than -9, it'll still be -8, -7. So overall, it'll still be Aussie weakness, dollar strength. Right? That I love it. I like getting those. I love getting those items go against the. So hopefully that makes sense what I just mentioned. But yeah, because the only alternative is if it's if it's a continuation, if we miss expectations on the Aussie data, and we get another, we go from 4.4% to, or from 4.5%. Actually, if we just get 4.5, 4.6%, well, that's just further Aussie weakness, and that'll just continue to push price further away from my supply zones. I don't want that. I want it to be a bullish report. So I'll definitely be paying attention tonight to see if it can give us that, give us a call, give us a boost up like that. So anyway, that's Aussie dollar. Let me take a look over here. Exit on the gold trade around 40, 30, 50, and overnight it went to 39. Go look at gold. Let's go have a look at gold, since you brought up gold on the chat there. 40, 30. Yeah, and you know what? I can't blame you for you got out of the trade. Oddcad, Kirtham. Yeah, we can do that right after gold. I don't blame you for getting out, because you had a swing low over here. I mean, it was 40.23, but you got out at 40.30. So, knowing that people are going to buy just because it touched a swing low like this, a low point, there's also going to be profit taking and things of that nature. So I don't blame you, but I'm glad you brought up gold, because it actually created a new opportunity, I think. And you guys remember last week we talked about the 8 different types of zones, supply and demand zones. Well, this introduces a flip zone for us. Okay. We had a demand zone. There was also a blue dash line, which means somewhere in the past there was a swing low, like we had right there from March, end of March, late March, going right through the top part, closer to the proximal line of this demand zone. What happened? Well, price bounced off that one supply zone up here, pushed down. And when we got down to the demand zone, same thing, just like we looked at just a minute ago on Aussie dollar, chewed right through that demand zone. And it chewed through the swing low, which is where you took your profits just ahead of that. And it closed at the very bottom of the candle. So expanded range candle downwards, breaking through demand, breaking through swing low, close at the absolute very bottom. That's, you want to talk about a power close? There's no wick on the bottom of this red candle. We've got a gap here showing supply heavily exceeded demand right there. That's a pretty strong looking supply zone. It's a flip zone created after touching a demand zone and just chewing through it like it didn't exist. So since that created itself, as you can see, get rid of that, I've got a new projection for gold. Okay. It's going to be this green or this red line right here. I just put that up this morning. Redraw it since I screwed it up. All right. That's my new focal point on gold. It was up here. It was clear up here. You guys heard me talk about this daily 4-hour confluence forever. It just never came back. This one caught a ask, however you say that, caught an ask, push price down. So completely turned this whole thing. I can zoom in just a little bit more. It turned this whole area into a bearish impulse leg, right? Bearish impulse, that means it had to have broken a structure to the downside and or a demand zone. In this case, it broke both and closed at the bottom of the candle on a 4-hour time frame. That's pretty awesome. That's about as strong as a bearish or bullish candle you're ever going to see, is when you get that like that. Expanded range and closes at the bottom. So anyway, that moves down to 4,060 for me, for my alert. And even drilling into a 1 hour, again, that the rule of fours, 4 divided by 4 is 1 hour. 4 hour divided by 4 is 1 hour. Look for our gap here. There's a gap there as well. That white line represents the proximal line of this green candle, which is the 1 hour. supply, which also gives us a gap. Okay. So that's two gaps showing supply exceeded demand. That's two sets of eyeballs on popular time frames, 4 hour, 1 hour. So there you go. I got the alert at the proximal line of the 4 hour, but the reality is I would probably wait just a few more pips, a few more points to get up and touch the daily, or the 1 hour rather, which it's on its way now. It's well on its way for that possible short. Just give me the proximal line of that 1 hour. Okay. As always, guys, not financial advice. This is just what I'm paying attention to. This is just what I'm considering. It is low on the curve, right? So I'm basically, in a way, fighting the curve analysis. Is really the reason I did this, because it chewed through all this strength with strength. So that's why my eyes are drawn right here. The volume could have been stronger. But yeah, this is probably just a partial position, guys. This isn't a 0.3 risk. I told you guys I upgraded from 0.2 to 0.3. Okay, this ain't a 0.3. I might go back to 0.2 for this, or even 0.15. Just kind of cut it in half a little bit. And if I get some profits on it, great. So that is my view. That's what I'm keeping an eye on gold. It's definitely my favorite between gold and silver right now, mainly because of this flip. Okay, let me go see what you guys got here. So you said Aussie CAD, Kirtan, Dow for KDX, and then dollar yen. Yeah, pound New Zealand. Okay, I'll try to fly through these all for you guys. I got it, what, 10 minutes? Okay, so when it comes to Aussie CAD, just want to double check over here. Now, I didn't think that was on here. So it's pretty well neutral. So right off the bat, I wouldn't normally be looking at it on a technical level, just because I don't have a fundamental reason why, nor necessarily a sentiment reason as a confirmation. But we'll take a look anyway, okay? Because it's good to find these levels in case it does pop on the list. Okay, Aussie CAD, odd CAD. And that's the beautiful thing, guys, about the top setups in Edgefinder. Again, I've said it a few times in the past. The biggest thing that Edgefinder has done for me personally is just saved me a ton of time throughout the day. Because I used to spend every single morning, probably 2 or 3 hours, just literally going currency pair to currency pair, writing up levels on all the currency pairs, only to realize that at some point I only really care about a small portion of them. So I was wasting so much time drawing pretty colors on here when I didn't even have to on probably 80% of them. But Edgefinder kind of solves that problem. It shows you the ones to actually focus on. So anyway, Aussie CAD, let's go to my daily on the right. As far as moving averages, higher highs, higher lows, we kind of went sideways after we bounced into this daily supply up here, which obviously was from this point. I guess that would have been a little further back here. I won't zoom in. It'll take forever, but that's 2021 supply area. And we've kind of started forming a little bit of a top right here. Looks like it's pretty accurate right now. Connecting those three tops. We are in a demand as we speak, a daily demand. Now, I wouldn't worry too much solely about the daily, except for maybe I would, because now I'm looking at the volume spread analysis candle. But hey, we got to draw up the daily demand right here for a starting point. And again, guys, there's a lot of zones out there. There's a lot of supply demand zones on a lot of different time frames. They're not all important, but if you're taking a trade in the direction of that zone, whether it's weak or not, it could still act as a landmine. I say landmine all the time, guys. That's basically what zones are. It's like a war, right? Where they have the landmines. They got to avoid the landmines. Same thing here, because they can definitely turn your trades against you. But nevertheless, that's our daily. Where's our 4 hour? We do have a 4 hour right here. All right, so that would be kind of your 4 hour confluence on this thing. Talking about this skinny doji candle, skinny indecision candle, and you started having some yellow candles. Okay, leg out. That second candle looked better. I wish that second candle would have been this first candle as far as the range of it, but that's what we get. But either way, both candles gave us a lot of volume, a lot of VSA relative to the more recent candles, these ones down here in the valley, these green candles. So that's where the volume really started to step in on these legs out. So possibly we could get a look there. Now, looking at the, again, back to the daily, we're starting to get a little bit of a series of lower lows, and we even actually have a lower high. It just didn't really go that much lower than this point here. So you could almost look at this as a sideways trend. Okay, again, we broke, by definition, this structure. It's just kind of hard to see. But you can tell we just barely broke that structure back in the past, back at the early part of the month. So this is almost a sideways trend. So if you're a sideways trend trader, hey, this might be your spot. You're simply buying low on the curve, because this would be the swing lows for the curve, whether you use these bars, or these bars. Your swing highs are pretty close together. Either way, you're at the bottom of the curve. You're in the bottom third, the bottom 33%, the discount area. So you've got a spot right there, okay? 0.9781, not a bad spot to look at and see if you can't just get a simple retracement back up. But again, don't take my word for this. I'm not a signal service personally, but if I were a sideways trend trader, I'd look for something like that possibly. I just wouldn't risk a big amount because, again, it's a sideways trend for a reason. It's indecision. When you pull back to a weekly, a daily time frame and see that this is just going where? Sideways, right? This is just a congestion. This is cluster, you know what, fill in the blank. So just keep that in mind. But yeah, that's about the best I think I could do on Aussie Cat is this confluence down here. We broke through this demand. That's irrelevant now. This one here worked out on a smaller time frame, but it's old news, so I can delete that. And that would be my look on that. So hope that helps. Dow, you asked about Dow. That is definitely my favorite of the indices, not just because it's on the Edge Finder, but I just think I like the structure a little better. It's just too expensive right now. I just need prices to come back down to my demands, which is way down here. Again, bottom third of the curve, guys. Impulse leg, bullish impulse leg. That's why I put the kind of the green highlight over this, because it broke this structure. Swing low, swing high. Middle, stay out of the middle. Bottom third is your discount zone, and that's where I've got a demand. This demand zone waiting on me right here. So it's just too expensive. I did look this morning up in this area, and there again, it just kind of turns into a sideways trend because you'd have to go to a smaller time frame, and there's just not really anything exciting to me. 2 hour, 1 hour. See, I'd be looking at this candle. My eyes go here. There's a lot of volume there, which is nice. But when it comes to the structure of the candles, I just don't like it. Nothing but wicks. Yeah, I don't like that because this red candle is way too far away from the bottom of this candle. What about a 5 minute? That's as low as I go. The 5 minute actually doesn't look bad. I got to admit, guys. You see this big, lovely tail to the bottom. You see all the volumes. See all these red candles. Okay. I think I went down to 15 minutes this morning. I didn't go down to 5. If you're looking at this on a very short-term intraday type trade, let's go to a full screen. Hey, you're playing in the noise. You're playing in the noise because you're on smaller time frames. You're playing with retail traders. But might not be a bad spot. Might not. I mean, you did break this structure here. Kind of dilly-dallied sideways, but there's no denying all this volume that we had, guys, yesterday morning. What did we have yesterday morning? 8:30. Okay, that was okay, Governor Macklem. The PMI data that came out, yeah, it's more medium impact, but regardless, hey, volume tells us everything, and you guys can see that a mile away. I'm actually going to put an alert there. I'm not going to lie. Now, I've got an alert. You guys saw at the very bottom of that curve. So that's what I'd be interested in. And I'm only throwing this alert in through the end of the week. Actually, I'll just throw it through the end of tomorrow. That's probably what I'll do. 1600 create. There we go. I'm keeping an eye on that. That could be a sideways trend type of a vibe as well. See all this sideways congestion, swing high, swing low, 5 minute demand, pushed up, broke structure. Hey, now I'll tell you, I'm pulling out if it bounces into this overhead supply though, because I do not trust a 5 minute demand if it first bounces into a much higher time frame 4 hour supply. So it's going to have to stop right away and start reversing. If it even sniffs and touches the proximal line, I'm out. Short term intraday trade, guys. I don't want to say scalp, but I guess you could say scalp. I'd be interested in that possibly. I don't do a lot of these, but we just saw the volume picture and we even got a red candle right here on this 4-hour chart. Volume tells us everything. Okay, guys, I'm out of time. Let me just double check. Dollar yen, we're at the highs. Did want to say that. There's not really a whole lot to report yesterday, except compared to yesterday, except for the fact that we are only about 20 pips away from 1986 highs. I'm still waiting on this demand all the way down here at the bottom. Got to see it retrace. I've got zero interest up here because you're going to have intervention traders trying to change things around. Pound and Kiwi. Let's finish with that. I know, James, I got to get up out of here. Pushing up, you've bounced into overhead daily supply. If we go to the daily real quick and refresh this, okay, you're touching for a daily supply, a little higher, some confluence. I've got an alert down here on the 4-hour chart. Right here is literally right at about your 61.8 fib if you're a fib trader. 61.8, and I love it like this because that just means go through, buyers buy because of 61.8. They put their stop losses below. Where are they putting their stop losses? Right in that 4-hour demand with strong VSA candles coming out. I love it. That's what I would like to see. Hope that helps. Sorry to rush the end. Ladies and gents, we'll be back tomorrow. Same time, same place. And trade safe, and talk to you then.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools.
So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream.
On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.